Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, the Chief Currency Analyst here with HYCM. Hi guys, it's good to have you on board. I'm just going to say hello to folks as you're coming in. Hi Van, good to have you back. Stephen, John, nice to have you. Rida, Ilkom, yeah, I think this is your first attendance, some of you guys, so really good to have you. And as other folks are coming into the webinar, could someone just type in the question panel and let me know that they can hear me okay? That would be great. It would be good to know that you guys are hearing me okay. There is a question and a chat panel in your go-to webinar control panel. And if you just type any questions you've got in there, then any questions you have, guys, I will cover either at the end of the webinar or as we go along. So feel free to use those panels. Hi, Aaron, good to have you on board. And yeah, so as folks are still coming in, just making it clear that as I'm going through this webinar, this isn't trading advice. Oh yeah, you're welcome, Aaron, no problem. This isn't trading advice. It's all about how to trade in a professional way. So the whole idea of this, hi Nadir, good to have you, welcome. The whole idea of these sessions is for you to sort of look over my shoulder, as it were, so you can begin to make independent trading decisions for yourselves. And you know, the whole way I've designed this 1 hour workshop in particular is to kind of really give the nuts and bolts of what's involved in trading. And there's a handout that's available here. That handout is on the right hand side of your go-to webinar control panel at the bottom under handouts. If you click on it, you will get this handout here, and I will literally be following through these 5 titles, you know, looking back, looking forward, looking at the charts, looking at your risk, and looking at the outcome of your trade. And you know, the whole idea of these is you should be doing this every time you come to trade, whether you're an intraday trader or whether you're trading on a wider time frame. If you're trading across, you know, days or weeks, use exactly the same principle. And by keeping things consistent, it will help you to mentally manage the rigors that are involved in trading, because trading is a very mental pursuit. I guess most high performance activities involve a lot of mental agility and resilience. You know, you think of you know, top class tennis players, top class boxers. You know, you have to have a tremendous ability to process, you know, losses, victories, wins, fears, hopes, doubts, and you've got to use them to keep in a good way. So having a system, a process that you use is invaluable. So if you haven't downloaded that, download it, print it out, and use it as we go. And I'm going to be referring to this as we go through the whole workshop. This is just kind of second nature to me now. I do it automatically. The special topic we're looking at today is the Bank of Canada. You know, of all the central banks in the major central banks in the world at the moment, you know, there's one bank which is in a more neutral position, and that's the Bank of Canada. So we'll just be spending a little bit of time looking at the Bank of Canada and seeing how the Canadian dollar could potentially be a strong currency from a fundamental perspective. And we'll spend some time looking briefly at the Bank of Canada as our special topic. We've got the handout that's printed out. Make sure you have a look at it. Don't forget you can email suggestions to me here, giles.coughlin@hycm.com. That comes straight through to me. So if you want to email me about anything, you know, feel free to. Right, the big principle that we're looking at whenever we're kind of trading, what we're trying to find currencies that have a polar opposite outlook. We want to find currencies that are going to be doing the opposite thing. Now, if you imagine, this is a silly example in some ways, but imagine you had to fight someone, okay? Now, if you had to fight someone, who would you want to fight? You would want to fight the weakest and smallest person you could find. Why? Because then you have a better chance of winning the fight, okay? When we're trading, what we're looking to do, we're looking to find a strong currency that's fighting against a weak currency, because then we know the bias is much more likely to be in one direction. So that's the whole process by looking at the fundamentals, looking at the market sentiment. We're always trying to identify at this point in time, what is the strong currency and what is the weak currency. Now, you have to spend time developing these skills, because a lot of these skills are nuanced and they take time to develop, but by practicing them daily, you will just get better and better and better. So, you'll be looking at me and what I'm going to be doing today, but go away from here and try and do this for yourself. Now, I try to post up strong and weak currencies at least once a day on the HYCM social network channels. So either the Telegram channel or the Instagram post or the Facebook post. I always try to put up a strong versus a weak currency. So if you're not using the social platforms, use HYCM social platforms so you can try and see, and test yourself. How did I do this day? I thought the strong currency and the weak currency was this. How does that match up with what I'm saying? Now, that's not because I'm saying I don't ever make mistakes, I don't ever get it wrong. Of course I do. But what I'm saying is that at this point in time, it's going to be beneficial for you to just use me as a sounding board to think, am I picking the right strong and the weak currency? So that's what we're going to do. We're going to look at the European session, pick a strong and weak currency. That's the European session that's just gone. And now we look at the strong weak currency for the American session that's just coming. So by doing two in one go, I think that offers better value, and it's better for you, for your guys learning, okay, to do, to look at two. I'm sort of, these webinars are developing, and I'm finding that's a more helpful explanation. Okay, so, apologies for that. Now, what we have to do is, the first thing we need to do is look back. So when you look back, you're wanting to identify recent sentiment by reading up on the last two sessions of market activity. Now, sentiment just means market mood. Just like people have moods, in exactly the same way, the market has moods. So what we're trying to find out is, what is the overriding sentiment at the moment? Now, sentiment can be something fundamental. It could be something to do with a central bank's monetary policy, or sentiment can be very short term. So you have to realize that sentiment can have different things make up the mood of the market at different times. And part of your skill set will develop over time of recognizing which moves are going to be stronger and longer than others. So we want to look back, and the first thing we look back is to the US session. And in the US session, coming into, this is the overnight, this is really the overnight Asian session. It's the US session from yesterday, stroke Asian session overnight. Okay, so basically there was a modest rally in Asian equities overnight on optimism that there's going to be a reopening of a US-China trade negotiation. Now, this is the first time the negotiations have opened since May of this year. Now, there's not tremendous, hope that great things are going to happen, but the point is the US and China are talking again face to face. So, a great delegation went over from the US, great delegation went over from China. The significant people are talking together. And so Asian equities were rallying overnight on that optimism, okay? So get into the habit, you want to be looking at the equity markets, because the equity markets are the most sensitive markets to risk, okay? And currency traders will take their cues from the equity markets. So here we had the Nikkei was up 0.43%, the Hang Seng 1.4, Shanghai 0.39%. So in other words, there was a gentle rally. when you're looking at equity markets, when an equity market is up or down by 1%, that's when you want to, really be paying attention. So this is a modest rally, just under 0.5% for the Nikkei and the Shanghai. Okay, so there is some modest strength, but it was just that, modest. There was also some news out that Chinese President Xi is under pressure to make significant progress in US-China trade talks ahead of the annual leadership gathering next month. So there is some sense when President Xi is feeling the pressure. Another event that took place in the Asian session, which was one to really look out for, was the Bank of Japan monetary policy meeting. Now, the Bank of Japan, they've kept all their monetary policy settings unchanged. There was some expectations that maybe they were going to be adding some dovish measures. There was going to be maybe an interest rate cut, or they were going to increase some quantitative easing or push out their forecasts for keeping interest rates low. But they didn't. They kept their forward guidance the same. They kept the monetary policy settings the same. And they just said, we're going to keep having low rates through to spring 2020. And that makes sense because the Bank of Japan don't really want to move before the Federal Reserve meets tomorrow. Because what the Federal Reserve does is going to set the tone for global financial markets, and then the Bank of Japan will have opportunity to respond after the Fed. So I can see there's been good sense with the Bank of Japan just keeping on hold. They don't want to preempt the Fed, and then the Federal Reserve does something different to what they're expecting. So they've just kept everything on pat. Now, this event had the potential to move the markets. Japan has a strong export economy, so a strong yen is difficult for their exporters. Okay, so there is an incentive for the Bank of Japan to weaken the yen, and that's what the quantitative easing program does. It weakens a country's currency. So there was incentive for them to weaken, but they haven't weakened the currency. They've kept everything exactly the same. But just to be aware of that dynamic, that the Bank of Japan is under pressure to weaken the currency, and what happens with the US dollar may knock on to the Bank of Japan. But for now, things have been kept as they are. So not one to worry about for now, but it was an event that you had to flag, and I flagged it up in the FX week ahead. It was one I was looking at, and no particular changes. There was some, the GDP forecast was reduced and the core CPI forecast was reduced, but they're modest reductions and they're not surprises. So that wasn't really market moving in any way. Okay, and then Prime Minister Johnson is back playing a Brexit chicken. Now, for those of you who are unfamiliar with the situation, I'll give you a very brief summary. The Conservative leader, Theresa May, who was the Prime Minister of the UK, has resigned, and there was a leadership contest. That leadership contest has been completed, and Boris Johnson won the contest. He's now the UK's Prime Minister. Now, for Britain at the moment, the overriding sort of financial concern is how Britain, or if Britain, leaves the European Union. So Boris Johnson is now the Prime Minister, and he's taken a very different approach to the approach taken by Theresa May. And the bottom line with Boris Johnson is he's much more direct in his assertion that Britain will leave the European Union. And although there's been a referendum, in 2016, I think it was now 3 years back, that British people voted to leave the EU, that still hasn't happened. So Boris Johnson's come in and says, look, we have to leave by October the 31st, and there's no ifs or buts or maybes. He's not wanting to extend the withdrawal agreement with the European Union, and the market has been concerned that Boris Johnson is leading the nation to a no-deal Brexit, and the no-deal Brexit odds are increasing. That is why we've been seeing strong selling on the pound, and that strong selling on the pound that started on first thing on Monday has all been because of this. And there was, I live over here in the UK, and I noticed a definite shift in perspective and tactic. There's been a definite shift, and the market is taking it a lot more seriously now which is why the pound is being sold off, because Boris Johnson is really, the potentials for a no-deal Brexit are very high now. So, okay, he's stated, he will not meet with any EU leaders until they agree to remove the backstop. The backstop is the border between Northern Ireland and Southern Ireland. So the issue is, how will Northern Ireland relate to Southern Ireland once Britain leaves the European Union? Because if Northern Ireland is part of the United Kingdom and Southern Ireland is part of Europe, there should, in theory, be a border between North and Southern Ireland. Now, there's been tremendous sectarian difficulties in Ireland between the North and the South. So constructing a physical border would be politically and socially very destructive for the people of Ireland as a whole. There's a lot of risks, and there's a lot of potential for old wounds to be reopened by this kind of arrangement. So, how's that managed? Boris is saying that you have to remove the backstop deal. There's no way we're going to have a hard border. We need to reopen the withdrawal agreement, essentially. Whereas the European Union is saying there's no way we're going to do that. So there's an impasse. Both sides are really digging their heels in. The way the pound's been selling off is telling you that Boris Johnson is digging his heels in order to lead Britain to an exit of the European Union. So at the moment, that is why the pound has been selling off, and we've seen some strong selling in pound. We will look at the charts in a minute as we kind of work out what we would do there. The other thing to just bring our attention to is the dollar index. Now, the dollar index is stronger in the European session, and the strength of that, it broke this 98 level, which would have been a tricky level. It just broken that level. We're just around 98 now. You can just see here. This is the dollar index. Dollar index is a very helpful chart to use, because it tells you the net position of the US dollar against a basket of other currencies. So I like to use look at the dollar index just to get a broad gauge of what's the dollar doing. I suggest you guys, if you're not doing it already, use the dollar index. It's called Dixie, DXY. You can find it on TradingView. You can find it on a lot of different terminals, and have a look at it, and it'll just give you an indication of what the US dollar is doing. Now, one of the sort of nicknames for the dollar index is that it's the anti-euro index. So the dollar index tends to do exactly the opposite to what the euro does. So if you overlay a euro US dollar chart on the dollar index chart, you'll see that they move in virtually opposite directions. So if you're trading euro US dollar, it's always worth having a look at the dollar index, because sometimes you can get some clues about future direction just by comparing the two charts. It was something I did a few months ago. I was looking for some direction on the euro US dollar chart, and the dollar index just showed me, gave me some good technical clues. If you overlay it, you'll see what I mean. Okay, so entering the European session, when I came to my desk this morning, looking at the main market mood. Okay, and so the main market mood that I had this morning was a strong US dollar, because the strong US data that's been coming out recently means that there's a lot less expectations of a 50 basis point rate cut. Going back about 9-10 days, there was this growing sense that the Federal Reserve might have a 50 basis point cut. Now, those probabilities have slowly been dialed back, and that's why we've been seeing some US dollar strength. And I think the risk now for the Federal Reserve meeting tomorrow is that the Fed are actually quite more optimistic on the US economy. We'll cover this briefly later on, but that's why I can see the strong US dollar. Now, weak pound. The pound is weak on the Brexit concerns and Boris Johnson's Brexit approach. So remember what we're trying to do. We're trying to pair a weak currency against a strong currency, okay? weak currency versus strong currency. And that was the currency pair that I was looking at. I was looking at the pound US dollar. So I'll just show you on TradeView. We'll just pull up a chart and I'll show you how this is, a couple of things. The first thing I want to show you is there was a trade that I took yesterday morning on exactly this point. And the reason I'm going to show you it, not to say, oh, here's my trade, but just to show a learning point from it. Now, I came to my desk when the price was about 12366, okay, on Monday morning. And I was looking at some analysis and thinking, what potential trades look good. And I could see that this pound was good. The Brexit concerns were growing. I knew Boris Johnson was becoming more combative. The chance of a no-deal Brexit were, more likely. I could see that was helpful. I could see technically that price had broken through this S2 pivot point. Now, this is a weekly pivot point on the daily chart. If you want to get these, pivot points like this, just go to TradeView, and when you set your settings, just put your settings in and set them as auto, okay? Because when you set them to auto, then they'll just automatically adjust to the time frame of chart that you're on. And so I saw this, and I could see that, look, here's the 1.2400 handle that was broken. We had this support level taken out by the previous day low. You can see that this support level was being taken out as I was at my desk, and I think, okay, well, there's a very sensible place to put my stop. I put my stop at 1.2432 something. Just give it a little bit of space above that pivot point, and then the first target, my target was this S3 pivot point just above. I think I went for 1.227877. So that was the trade that I took, and that was a take profit. Now, there's a learning point here because I was reflecting on this trade, and when the trade went down, hit my profit target. So I didn't fiddle around with the trade. Objectively, that was a 10 out of 10 trade. But then I started to look at it, and I felt, as I was reflecting, I felt some remorse because I thought, well, look, I broke through this pivot point and we hit the next pivot point. Why? I was thinking, why didn't I move my stops down to this pivot point and make a play for the S4 pivot point? That would have been, a better, as it were, trade. And that just reminded me, I was chatting with a fellow trader, about this, and as I was chatting, they just said a really good point. So we can make even the best situations. It's amazing what we can turn into a negative, and that was really helpful because that trade was successfully executed. The stop was well placed. The take profit was well placed. Target was hit. Everything went perfectly, but yet I still felt a bit negatively about it. And I think that's just a real good, helpful thing. That even when you have a successful trade, the temptation is to maybe fiddle around, or your temptation is to make something bad good. But actually, look, we've taken the profits. That's a nice trade. You're out of the market, so risk has gone, and the money's profited and banked into your account, and you've started the week plus, which is great. And with such a data-rich week, what a great thing. But I just wanted to share that with you because that struck me. The fundamentals were in place, the technicals were in place, take profit was hit, and yet I still felt bad about the trade a little bit. So that was just a learning point for me, that once you're making the right fundamental decisions, you're using the correct technicals, that there's still the temptation to find something negative in your trading. And this just goes back to that point about trading psychology, which I spoke to you about. And I guess it's all high performance activities, and trading is a high performance activity. And that's just a really good example. So So when I came to my desk this morning, price was right down here. So the question is how do you get in? Okay. Now, looking at the chart, I'm going to take the pivot points off for a moment, but you can see that, so we're here on the 30th of July. So going back to the 29th, so if you just put a Fibonacci retracement on from yesterday's highs, okay? So yesterday's highs was, where was it? Yeah, it was, okay, it's around here, yesterday's highs, bring it down for the lows. So where do you get in? Now, in terms of the Fibonacci retracement levels, on the 15-minute chart, like for intraday charts, you know, you've got some consolidation here around the 1 point, you know, just above 1.23. You've got consolidation here about 1.2239. So you've got this 1.2250 level, which is a 50% fib retracement level. And, you know, so looking at it, you know, I was thinking to myself, well, I don't want to get in down these lows. And look here, if I got in down these lows when I came to my desk, you know, just around 7 o'clock, you can see, look, you know, I would be pretty much nowhere if I'd entered that trade now. And where do you put your stop? You see, this, hang on, just, yeah, sure. EFAM, all you do, hang on, let's, EFAM, all you do is you go to TradingView and you choose, I'll put them on in a minute, EFAM, okay? I'll show you how to do it, how to put the weekly pivot points appearing on the daily chart. I'll show you how to do that. All right, so this is the problem. Where do you get in? You see, I've been in the trade, I've had my profit taken, but I still want to get into the trade. But see, if you end up entering in at these lows, what you'll find is over time, even if you're correct on the fundamentals, what you'll find is that over time you'll end up having to endure lots of retracement. And you know, imagine if you entered in the lows here, your fundamentals are correct, but then you're entering in the lows, and then 134, 223, you know, you're 150, 200 points underwater if price retraces back up to these levels here, which it could easily do. I mean, this is just a, you know, retracement down from yesterday's highs, but you could easily go up further on, you know, on a higher time frame chart. So when, you know, you're looking at, you've got to think to yourself, okay, you know, do I want to chase these, or do I want to look for a retracement? And then for me, it was thinking, I'm not going to chase this price. So that's when you'll be looking at these, you know, retracement levels. So you're looking here at 1.2300, that, you know, the big round number there. You can see here there's another horizontal resistance level here, okay? Up to this kind of level here, 1.23, and then you put your pivot points on, and you can see, okay, where have I got some confluence? And you can see, okay, I got the 61.8 level, confluence with the S2 level. So you can see, okay, that would make sense for a place to have my entry. And then you could, you know, if you wanted to really anchor your stops, put them above this level here, 1.2500 level. That would be a very safe anchored stop. Whereas if you're wanting to have a tighter stop, then look somewhere above this pivot point would make sense. You know, there's a minor little level here, the 1.2400, just above that pivot point on the 1.2400 level. That's back into a key resistance level on the daily. You can see here that level is a key level. So, you know, if you were entering a short, you know, anywhere back up into here looks attractive for shorts. Okay, so that's, so Ephraim, I'll just show you how you do that. Okay, this is how you do it. So let's take the pivot points traditional off. Okay, all you do, go to TradingView, and then on TradingView, what you want to do, you want to go to indicators. The indicators, go to pivot point standard. And now they're on your chart. Now just set the pivot point to auto. And if you set the pivot points to auto, you will, the chart will automatically adjust to the time frame you're on. So you're on a weekly chart, daily chart, you see there's adjustments. Okay, it just makes it automatically. And the other thing, the other thing you need to be aware of with these kinds of trades is big levels. Okay, and you can see, look, we're coming down to this big support level here. So this 1.20 level. This is very significant support. So we're coming down to that support level. So whenever you get a support level like this, what you're going to get is you're going to get traders taking profit. So, oh, you're welcome, Efam. No problem. I'm glad that helped. But remember, you're going to get traders taking profit. So you don't want to try and hold through these levels, because even if the fundamentals are good, you're going to move down to that level and there's going to be profit taking. So the pound would just rise unless there's a new catalyst. It would just rise on that profit taking. You see the way that prices reacted strongly from these levels here. This is a level of demand. So traders who are short the pound will be looking to this level and they'll be taking profit. Okay. So, and once those profits are taken, the pound would bounce back, and then you'd be looking at a retest up here and then falling back down. So the kind of lesson of the pound is, it's as I put here, this is the currency, but pound is very stretched at the moment. So in these scenarios, it may be prudent to wait for a deeper pullback, a new catalyst, or maybe the Bank of England meeting this week. So there's a few things ahead that we can start looking forward to. Okay, so a potential new catalyst would be the Federal Reserve meeting tomorrow. The Federal Reserve, as it meets, is it's the most highly anticipated scheduled event of the week. Federal Reserve meeting on Wednesday. Okay, and the US dollar is going to take its tone from that. And we also have the Bank of England meeting this week. Now, the Bank of England are keeping rates on hold, but there will start to be a growing pressure on them to cut interest rates, particularly if this Brexit scenario carries on dragging the UK investment, and the fear keeps dragging on the UK economy. Then the Bank of England may be forced to act. Maybe that's going to have some kind of catalyst for the pound. So at the moment, the pound remains a sell on rallies. That's what you'll find, that as pound moves up, there would be sellers at resistance points. However, the thing to be aware of is that if there's some positive Brexit news, then those short pound positions will unwind. So you have to be very cautious of this kind of event, because it's volatile. And if the European Union do come up with a separate offer, if Boris Johnson manages to find a way through, then the pound is going to rally strongly on optimism and pleasure that there is a deal for Britain to leave the European Union. So that's something to be aware of. You don't want to just have loads of short orders in the market. So one way around that is I'm going to send you a website, a free website, okay, that does give. There we go. It's alertfx.com. I've sent it to you all. I'll just show you it here. Okay, all you do is you go alertfx.com, and when you're there, you can just choose a currency pair, choose an alert price, and create an alert. You can have it, I think, either a text message or sent to your email, but either way, you will get a message, and you can have like 5 free alerts on that website. So I've sent you that link, and that's the sort of thing you can do. You can look at a place, look at looking at the pound. The pound at the moment is just, it's being sold off so heavily. it's going to lose value against pretty much, you know, everything. Okay, so let's take pound CAD. Okay, so pound CAD. Okay, again, look, we've got you can look at the different pound charts here. Okay, so this is coming down into that support level. So you look at something like that and think, okay, well then, you know, if I was going to be trading that, I definitely want to retrace, because there's no point trying to chase shorts there. Put your 15-minute chart on, then you draw your fib retracement from yesterday's highs all the way down to today. Okay, so you're thinking, okay, there's some consolidation there. The 50% fib level looks good. You've got 200 exponential moving average. Let's see if there's any pivot points here. And you got look there. So that pivot point in there around the 1.6. So 1.6150 looks good. I'll take those pivot points off because they sometimes makes it hard to see. But you can see, okay, the 1.6150, you got 50% retracement level, 200 exponential moving average, and a pivot point. So there you can see, look, this is the kind of place where you would want to potentially short the pound on a retrace. And where do you anchor your stops? Well, you could anchor your stops just above those, you know, that swing point on the 15-minute chart. You can see, okay, so there's one swing point here, and there's another swing point there. So just above here, 1.63, you know, 1.6315. Stop will be very nicely anchored. Where are you targeting? Well, you've looked on the higher time frame. You can see this is a strong support level down here. So you'll be wanting to target around 1.600. Just target those previous day's lows, and then, you know, you've got a decent chunk of the market there from 1.6150 down to about 1.6, so about 150 points. You know, roughly a one-to-one trade. Okay, not bad at all. That's the sort of thing that you could be looking at. So that's you know, that's a number of different things you can do. Use your alert FX, and that keeps you in the right kind of place. Is that clear, guys? Is that making sense to you? I hope that's making sense. We'll move on with the, yeah, okay, good, Olafemi. Yeah, see, these skills take time. Do the same thing over and over again. Just get into the habit of actually doing this over and over again. And what you'll find, you know, what I found when I first started, you know, using fundamentals was that I was calling correct trades over and over again. You know, I was getting the move of the market. I was getting it right over and over and over again. So, you know, trading these moves on the pullbacks can be very effective. Okay, and just trust your analysis, trust your technicals, set your take profit targets, and just trust it all. Okay, and the more trust you have in it, the better. And, you know, use a demo account. Use demo accounts to get your confidence up, and you'll get better and better at this. Okay, just wanted a couple of things. Looking at some order flow levels. There was a significant order flow level, which I noticed at the 1.1200 level on the euro-US dollar pair. There's some sellers. Now, these order flow levels, I post these sometimes on the HYCM social networks, and these are institutional orders that market participants see in the market. You know, big banks, big funds recognize where lots of orders are, and these orders get circulated around. Okay, and so this is just a collection of some of those orders. And the order that was really interesting is there's a lot of sellers at 1.12. Now, I'll show you. You know, the euro-US dollar pair is in a very narrow range at the moment, and it's in this narrow range because of the Federal Reserve meeting tomorrow. Okay, so if you look on the daily chart, you can see, look, price is consolidating at this strong support level down here, 1.100. You can see, look, so here. Traders have been taking profit against it. You know, there was some uncertainty there on a data release there, can't remember exactly what that was. It was a few days ago. I was following it. I just had a mind blank. But the sellers, there's a lot of sellers up here, 1.1200. So one, potential trade that I'm looking at is thinking, okay, well, I know in the market there's a lot of sellers up here, 1.1200, and I know that nothing's going to change before the Federal Reserve meets tomorrow. It's very unlikely there's going to be any big news out for the euro or any big news out for the US dollar. So we're in this kind of wait and see mode. So in this wait and see mode, we've got a bearish ECB. The pressure is down. The risk is that the US dollar is stronger than people have been expecting. So in other words, if I could get into that trade before the Federal Reserve and move to break even, this would be a great place for me to look at. So this is one trade that I'm looking at, and that's my reasoning. Got the institutional orders up here, 1.1200. Got the Federal Reserve meeting tomorrow. The risk is dollar strength. I know we've got euro weakness on a dovish ECB. They're going to be cutting rates in September. 10 basis points expected at the moment. So I know the bias is euro-US dollar pair. You've got this resistance level here as well, and you've only got to put in a pivot point on daily chart. This is using the automatic software, so it's a weekly pivot point. And I know I've got some resistance up here as well. So for me, I've got my stop placement 1.235, just above that level. So 35 point stop playing down for those lows. Just a very simple move. Again, that is not trading advice. I'm not saying you should do that. I'm just saying what I'm doing, giving you my reasoning, giving you my process, so you can see, how a professional trader goes about and making decisions. Right. Current probabilities for the Federal Reserve rate decision tomorrow. Right. Market is virtually 100% expecting a 25 basis point cut, and current probabilities are 26% for a 50 basis point rate cut. Now, if there's a 50 basis points rate cut, that'd be much more dovish than is expected, and we would see US dollar weakness. So we would see euro US dollar strength, pound US dollar strength, Australian US dollar strength. Okay. Now, if it's one rate cut, 25 basis points, and then the Federal Reserve say, we're just going to have one rate cut as an insurance cut, but the data has been good, which it has. We're going to be more data dependent. Then we're going to see some US dollar strength. Okay, so that is the risk for tomorrow. Which way will the Federal Reserve go? Ultimately, I don't know. And the point of this is that you don't need to know. But what we need to know is, what will the reactions be if it's a 50 basis points cut rather than a 25 basis point cut? That is the bit to get straight in your head, okay? So do your research, make sure you're prepared. The simple answer is that if it's a larger rate cut, so if it's a 50 basis point rate cut, then that will mean we'll see US dollar weakness. If it's just a 25 basis point cut, it will depend on the forward guidance. What's the reason? What did the Federal Reserve say? If the Federal Reserve are optimistic on the US economy and saying the economy is doing good, we don't necessarily expect as many rate cuts as we did a month earlier, then we're going to see US dollar strength. So then we'd see euro US dollar weakness. So a chart like the euro US dollar, this is perfect, because look, we're right at this level here, this 1.100 level, big support level, okay? And most likely what's going to happen here, we're right at that level, whether we go above or below is most likely to be decided by the Federal Reserve meeting. So get that into your head. Again, with the pound US dollar, you can see that's why we don't want to be chasing a pound US dollar short now, because you could enter a short here. Some people have, they would have entered right down here at the bottom. And if they've entered right down here at the bottom, they're now 50 points underwater. So they're now 50 points in drawdown. That's a big emotion. And they've got the Federal Reserve meeting coming out tomorrow. And what's the Federal Reserve going to do? It could really move this pound. We've also got the Bank of England meeting on Thursday. So that's why, even though we're bearish pound US dollar, there's risks ahead. and trading on pullbacks makes much more sense. The COT report, always worth looking at the COT report. This is basically positions of large investment funds, and it shows you how they're positioned in the market. And, you know, no surprise, pound shorts remain the biggest positioning in the market. And I did hear at the start of the week, there were some hedge funds adding to those short positions. So I'm expecting those short positions to increase. That's a lot of shorts now on the pound. And, you know, I'm reading some conflicting opinion about what happens with these pound shorts, the volume. Some people are saying pound shorts are quite crowded and they're expecting pound to retrace. But then I'm reading other people are saying that, you know, the fundamentals of the pound are still really poor. You know, hedge funds are adding to their short positions. I remain selling the pound on the rallies. That's my position. I think that makes most sense of it. But again, I pointed this out last week, is if there's some positive Brexit news, the way you use this COT report is you look for traders that are in the wrong place. So if there was some fundamental good Brexit news, what would all those pound short traders have to do? Well, they would have to unwind their positions. So all those short traders would have to close out their positions. So that means that you're going to see strong pound appreciation. So if we get some positive Brexit news, you know, just on any kind of positive announcement, there's going to be a few hundred pips rally that then is going to carry on. So there's certain trades that, you know, it doesn't matter what price you get in, because, you know, the fundamentals are so strong, you're going to make some money from it. That's, you know, a little bit what's happening with the pound, okay? Because if there's some good news for the pound right now, so many traders are short, all those short positions closing will in itself drive up the pound, let alone the long positions being added. So that's just something for you to be aware of. And I want to cover briefly the Canadian dollar. Look, this is the special element that I wanted to share with you, and the COT report helps me to make it. You see how all these currencies are short? Look, euro short, pound short, yen short. Okay, you get the impression. But there's only one currency that's long, and that's the Canadian dollar. Okay, it's the only major foreign currency long position versus the dollar. So this is the only position that's long. Okay, Canadian dollar. The reason is Bank of Canada has been very neutral. They are alone of the major central banks in being neutral, and because they are neutral and alone, that has been bullish for the Canadian dollar. So we've got some Canadian GDP coming up at the end of this week, so just be aware that the fundamentals, you know, the bigger picture for the Canadian dollar is Canadian dollar potential strength. So it's just worth looking at, you know, if you get any pullbacks on the Canadian dollar, it's worth considering when you know the picture that it's a more bullish currency because its central bank is neutral. Okay, European equities in the European session, they moved into negative territory. So, you know, when I put these equities up as I was preparing for this webinar, we had a lot of red entering the markets. We had the S&P 500 futures, they were down, the French 40 down, the DAX was down, the Spanish 35 was down, Portuguese, Italian FTSE, the Athens composite, all of those equity markets were down. The European market that wasn't down was the FTSE. Okay, now the reason the FTSE was up is because when the pound is down, the FTSE is up, and it's to do with the number of UK companies that earn in US dollars. So with the pound US dollar pair falling, what that means is if you get paid in dollars, you're effectively getting a pay rise. Okay, so, you know, if you're in the UK and you get paid in dollars and the pound is falling against the US dollar, that means you're earning more money. A lot of the large FTSE 100 companies are paid in US dollars. So, you know, big oil companies, you know, companies like BP, for instance, they are essentially getting a profit rise by a weaker pound. So that's just to be aware of. That's why the FTSE 100 tends to rise when the pound falls. You'll notice that if the pound is down, the FTSE tends to be up. That's just a dynamic for you to be aware of. Okay. I'll move on. Okay, Donald Trump was tweeting. Donald Trump has been tweeting quite a few things about China. Remember the context. The context is that face-to-face talks have started for the first time in quite a few weeks, I think since May of this year, and already Donald Trump is, tweeting away. And look at a lot of the tweets. Nothing new, but it just reminds everyone how difficult a China US deal is. China's doing very badly, worst year in 27. We're supposed to start buying our agricultural product now. No signs that they're doing so. That's the problem with China. They just don't come through. Economy's become much larger than the Chinese economy these last 3 years. My team's negotiating with them now, but they always change the deal in the end to their benefit. They should probably wait out our election to see if we can get one of the Democrat stiffs like Sleepy Joe. Then they can make a great deal like in past 30 years and continue to rip off the USA, even bigger and better than ever before. The problem with them waiting, however, is that if and when I win, the deal that they get will be much tougher than what we're negotiating now, or no deal at all. We have all the cards. Our past leaders never got it. Now you see that kind of speech is very, it's tough language, and it means the negotiations are going to be hard. So, we saw yields down, we saw equities down. So there's a risk. There was a mild risk on sentiment, and that turned to a mild risk off sentiment. No one was hopeful, particularly about these talks anyway. And it's just, Donald Trump tweeting this way is just a strong reminder. So, okay, equity markets lead the way for risk. Equity markets falling, that is bad news. So Boris Johnson was also speaking on the phone during the European session to the Irish Prime Minister. Sorry, I haven't put who he was speaking to. He's meant to have spoken to the Irish Prime Minister, and sources describe this as warm, and this was in the context of early reports that PM Johnson will not meet with EU leaders until they agree to remove the backstop. Nothing really there of note, just something to look at. And then we saw entering the US session, we do exactly the same process, okay? Now, what's the strong? I still thought the US dollar is strong. And then I recognized a new strong currency as well. It's the strengthening yen on the risk-off tone. Donald Trump's tweets is making people nervous. So we saw equity markets getting hit. We saw some bond markets yields falling, and we saw some yen strength. So that's gave me two different currency pairs. And I could have had a third. I could have had a pound US dollar, a pound yen, or a pound Swiss franc short. So that was exactly what I'm doing in the US session. That's what I'm looking at now. If I see any, I'll show you one thing I was looking at that I was tempted to look at, but I haven't gone for in the end. But I'll show you what it was. It's on the pound yen. I'll just show you my rationale because it will help. Okay, so this is a weekly chart. We see that we're just broken through the 135 handle. We've broken to the downside. Okay, the next target here is 128.60, just above that S2 pivot point. And I thought, well, with Brexit concerns likely to grow, with yen probably strengthening on a US-China trade deal that's probably going to go badly again. Look, the pound yen just looks a really attractive short. Stops above the weekly high 135.36 and make a play down to 1.28. Obviously, on a weekly time frame, that stop would be a few 300 points. So you have to adjust your position size, obviously, to allow for that. But I was thinking, well, do I take this trade and move it down and go for a longer term trade? And that could be a few weeks. And in the end, I decided not to follow through with that idea. So a retrace back up to that level would be very interesting. Retrace back up to the S1 support level, 133.50, with stops above the high here, just above that weekly STIP would be very interesting. So that's potentially something that I'm looking at, but that is a longer term trade. That's not an intraday trade, but that's just to be aware of. Okay, that was from another day. Okay, just to remember with the Canadian dollar is the only central bank not looking at cutting interest rates. Neutral stance means that CAD is bullish, but remember that Canadian dollar has a strong correlation with oil. So whenever you're trading Canadian dollar, you always want to look at the oil chart. You know, the US dollar Canadian dollar pair has a 96% correlation with oil. So, you know, they will move together, basically. So just to be aware of that, whenever you're trading Canadian dollar, you must know what's happening with oil. You don't want to be just trading Canadian dollar without having any idea of the oil markets. Let's have a look. So that was from a previous day, I'm sorry. Now, free resources to work out sentiment for yourself. Take a quick screenshot of that if you want. Some free resources to help you find the sentiment. Obviously, a paid service can be very helpful. Roundswalk is a paid service, and that will do a lot of the work for you. Looking forward, we don't really have much. We've got consumer confidence out later, but that's only going to be mildly affecting the dollar. I'm not expecting any surprises there out shortly. And the PCE, core PCE numbers were slightly softer, and that's the Fed's preferred inflation measure. And it was slightly softer, which gives you, you know, outside chance that there might be a 50 basis points rate cut. There could some argue within the Fed saying we need to do more than 25 basis points. Here's the intermarket correlations. I just leave this here. It's helpful. You know, if you're just trying to understand how equities and bond prices and commodities and work, just take a quick screenshot of that. Gives you a quick thing. And again, risk on and risk off markets, I'll include those as well. Whenever you get a risk on market, you know, high yielding currencies like Australian dollar, New Zealand dollar, and Canadian dollar appreciate, and then the yen and the Swiss franc are sold off, and the vice versa for a risk off market. That's why I was looking at pairing the pound with the yen, because there was a slight risk off market. So risk off market means that we get appreciation of the yen. So strong yen, weak pound, pound, yen short made sense. Okay. So then, you know, obviously, once you've looked back, you've looked forward to identify key event risk, and then we look at the charts. We've done that together today. And of course, you look at your risk. You're never wanting, you know, there was some research done by a big broker. I won't say the name for obvious reasons, but the research was done, and what they found is the more leverage that a retail trader used, the less chance that retail trader has of being profitable and successful. So using too much leverage, risking too much money is probably the single biggest thing that you can do to increase your profitability and chances of being in the FX trading for a long time. Okay, so look at your risk carefully. I advocate not risking more position size wise than you have in your account. So if you've got a 1,000 US dollar account, to trade without leverage would be to trade 0.01 micro lot. Okay, that's the level of leverage. With my fund who I trade with, I can only use leverage to 1 to 2. So I can only use leverage that is double a non-leveraged position. Okay, so say you got $1 million US dollar account, to trade that without leverage, you would be trading 10 lots. Okay, so imagine that my account was $1 million US dollar. The maximum amount I could trade would be 20 lots. Okay, and that would be the maximum of leverage I'll be allowed to use. So do the equivalent for your same account, and see if that helps you with your profitability. Don't forget the usual offers we do. Get one-on-one coaching with me when you deposit $1,500. You get 1 hour session plus follow-up for $3,000 and 2 hour and 1 hour and 1 week VI support with myself for $10,000. Again, these deposits, it's your own money. This isn't what you pay for my coaching, because I think some people can get confused. These deposits are what you would put into your own trading account. If you make those deposits, then you get these times with me to help you and help you focus on your trading. Guys, I hope you have a really good week. Don't forget, we've got a lot of events. No, you're welcome, Nadir. It's great. Remember, we've got a lot of events this week, so be on your toes. If you're unsure, go back to the FX week ahead on Monday and listen again to what's coming up. Haven't been able to go through all the events because there's been so much going on just now and today. Take care, guys. Trade carefully, and I look forward to seeing you next Monday. Yeah, John, Aaron, that is great. I'm really glad. It's really good for me to hear that. I try to make this as helpful as I can for you guys, and the only reason, I've learned from some great traders, and I'm able to, and it's great for me to be able to pass on that knowledge, and that's just how you keep going. Well done to you guys for attending, because by attending, you're just accelerating your learning process. And don't forget, you can always email me, like some of you guys who are regulars. An email, let me know how you're doing and how you're getting on. Guys, take care, and I hope you have a really good week, and look forward to seeing some of you guys on Monday and Tuesday next week. All the best. Thank you, John. Thanks a lot, Amy. Bye.